Okay, looks like I am live. Currently on Bookmap. Let me see if I can post the link to my server. Okay, let's get back on it. So, yeah, currently on Bookmap. Want this session to be a little bit about just how to use Bookmap in general, more like day trading. How to, I guess, use both day trading ideas through Bookmap, but also Confluence using TradingView for day trades. And I want to give a shout out to Moonrise and Nimble. They've been looking at quite a neat little strategy using Lux Algo, and I want to just show you a little bit about how I've, would I say, refined it? Maybe that's not the right word, but anyway, how I've been utilizing it to give us some indication on solid enough entries and whatnot. So let me just flick over to that real quick. Get rid of that. Don't need that. Don't need that. Okay, so fade on over. Let's go. So there's two things we need for this strategy. We need the Lux Algo price price action, and we also need the where's the other one? The actual premium Lux Algo, which I think is, when you pair these two together, can be quite unique. For a number of reasons, really, but primarily for looking at ways in which to get an entry. Now, here's the deal: really short, sharp, and sweet, right? So the idea is that we're on the 15-minute time frame at the minute, although this works just as well with the 5-minute and even maybe lower. We do have to clean out the Lux Algo a little bit. Like right now, I think by default we have both the internal and the swing both set to 5 and 5. But what I like to do is to just clean it out, because I think if you have 5 as an example, and then we'll have 5 on the swing, what that tends to do is it puts a little bit, well, what do you go for? Do you go with the swing or do you go with the internal? Well, realistically, you're going to want to go with the swing. If you want to get more entries, but less, how would you say it, less sensitive and more prone to break, then use internals. But if you want more of a solid entry in terms of a higher chance of a reversal, then you would go with the swing, in my humble opinion. Obviously, the swing will get less attacked, but the idea, and again, big shout out to Moonrise and Nimble, but the idea here is that you wait for an order block to get tagged only when it's in a reversal zone. So you wouldn't necessarily go for a just an order block here. Number one, because it's not, it's a less probability chance of being hit. And the way I like to do it, again, I'm just going to clean this up a little bit, because I want to, the idea for me is to try and get, well, actually, I don't even want internal on, because internal are less structural, less amount of traded volume in that area. So I'll leave it at 2. But that's, I want to show just the swing, because the swing will just give me the stronger order blocks, let's just say. Now, these are both very valid, right? Very valid in the sense that they are both in the reversal zone. And the way you approach this is you approach it by targeting the center section of your order block. If you want to be a little bit less risky, let's just say, you can target the bottom. And the way I like to do it is I like to put my stop outside of the reversal zone. Now look, when these things are going to crack, they're going to crack, and they can go, far beyond the reversal zone. But if you take, this would have been a lot longer of one, but if you look here, right, this would have been an absolutely perfect one. So the order block here was formed at this candle here. Now this was, let's see the date on this, on the 22nd. It's the 25th today, so literally 2 candles later, you know, we hit the middle point there. Now the idea is that you take, which this is the I think it's called a trend tracer. Let me just double check. The smart trail. My apologies. This is the smart trail. This blue, which is a, let's say a resistance or a support line, and the red, which is a resistance line in terms of a support and resistance. The idea is that once you snag a call, so once you get filled, your take profit is when we basically break this smart trail here. So that would have been a really nice trade to have gone into. You know, you'd have got in the entry at around 22,324, and you'd have got out at 22,942. In terms of a point move on that, that would have been quite a nice move actually when you put that in. So we take there to here, that's where we would have got out. 622 point move. That would have been a nice move and not invalidated at all. Where would you have had your stop? Well, you'd have had your stop here, just underneath the reversal zone. Let's see if the next one would have come in. Now look, we wouldn't have got in one here. I say we wouldn't have got in. Let me just double check that, because if we take our reverse, where's the replay mode? Sorry, we remember these things repaint, and when they repaint, there you go. So this would have been another one, right? The problem is we didn't quite hit the middle section, so we wouldn't have hit that there, but that would have been a really nice one to have got in on. You know, again, you can use the start of that order block, because number one, let's be honest, it is in the reversal zone. Whether you choose to say the start or the middle or the end at the the peak, I don't know if you can see this clearly, but if you look in the center here, you do have a center line. So my caveat is that I like to use the center point. Now you would have had quite a fast stop loss here. Your stop loss would have been 23,405. Entry would have been 23,161. So you're talking a good 200 or 300 basis points for a stop loss on that one. However, you would have got hit and then reversed here and almost took the profit at 22,944. So you'd have got a small profit on that one. It wouldn't have been a huge one. Let me take this replay off. So again, where would the next one have been? Well, you can see here we would have caught another nice one. So that one would have been on the 25th, which is today, and that was at 1:15 in the morning. So this is UK time, of course, 1:15 in the morning. We'd have got filled here, and then our exit would have been here, and that would have been another nice move. Remember, this is on the 15-minute. We're going to go into Bookmap in a minute, so to look at how the confluence can really start to help out with this idea. So that would have been, I don't want to do a long position. I want to do actually, let's do a long. That would have got in there. You would have had your stop. Let me just take where the stop would have been. Stop would have been there, and you got out on this candle here. There. And that would have been a 425 point move. So again, 2 strikes, 2 wins. Not a bad rate on return, and your risk to reward ratio there is 3.39. If I do the other one, this one would have been even better. Long position again. We either got in here. This was the start of the order block. Again, your stop loss would have been about there. Where did we get out? We got out on this candle here. And a nice move to the upside would have been, it's here, isn't it? Let me just take that down a little bit. There would have been 618 points, or a 4 to 5 risk to reward ratio. So again, really nice, a really nice trade there. So here again, not only missed out on another one, literally by about 5 or 6 basis points. Where would we have took our take profit? It's up here. The key thing here, just to be mindful, is we do have an order block here. Now this is an internal order block, so there's a much higher chance that this would break. However, you know, the let's say the smart trail is just above the top of the internal order block, so it may break, it may not. Just something to be mindful of. But let's just say why it's important. So let's look at this candle here, right? We know, so the bottom of this order block here, and again it's in the reversal zone, is right at, let's see, 22,278. If we flip over to Bookmap, let's see what happens on Bookmap. I think it's really interesting. You can see it was 22,300 and something, 22,328. But if you look, this is that line, this red line you're seeing here. So come down, literally absorbed. Yeah, you can see exactly what happens. So this is the cumulative volume delta, CVD. It's showing bearish pressure. So bearish pressure is coming into the market. However, the price, once you had that huge move down, at this point the price couldn't go any further. Bigger players absorbing the buys, and then we had a trend reversal. So now we come down, couldn't quite reach that order block area, and again that would have been that perfect entry that you're looking for in order to be able to reverse, take the move, get out at that next level. Now, interestingly enough, this is the VWAP. Okay, so the VWAP currently is at 22,572. 22,572. So let's see on the actual smart trail. 22,000. Let me just double check that again. 22,572. Right, 572. So if we go back into that 572, what I'm looking for is the any resonance to that? No. I wanted to know, does the trend, the smart trail, have any relationship to the VWAP? Like a reversal to a reversion to the mean, but it doesn't. So this is a really nice strategy. You know, you're not going to win every one of them. That's fine, but I think in trading, right, trading is about winning more than you lose, and that the risk to reward ratio is better than the losses. So you know, this might have been a loss. Realistically, it's 137 basis points versus 618 basis points. This one, again, would have been a risk to reward ratio of 3.39, but the loss would have been what's that, 125 basis points versus 425 basis points. So it's a nice strategy. If you win 51% of the time, well, actually you could lose more than you win on this strategy if these risk to reward ratios are this common. And again, it's a case of ignoring. I mean, you'll notice on my chart I don't have the trend signals, whether it's the buys, the strong buys, all that kind of nonsense, because I don't know how well it picks them out, but I think sometimes they just mess with people's heads, and even if you back test it and you change your sensitivity and whatever else you want to change on it, doesn't always seem to pick out the best ones. And so I think using the Lux algo indicators, it's great, but forget about the noisy part of it. Look at it for what it is. The reversal zones are really good. You know, if you include them in with the order blocks, and let's face it, what is an order block? It's a strong reversal change, whether that's institutional. So you know, prices come down, come to a specific area, and for whatever reason, you know, the counterparties come in and really push price to the opposite way. So that's a really strong intent. And the bigger the order block, as in when I say bigger, the bigger the amount of volume that's being traded in that area, the more stronger that order block is, which is kind of the difference between swing and internal. Internal are relatively small, you know, not a lot of traded volume, therefore it's difficult to infer how strong or weak that order block will essentially be. So just using that as a way to kind of, you know, think about where your entries are. But again, it's a really solid strategy. Let's try the 5 minute. Let's see what we see on the 5 minute. Okay, so you can see this is where the order block was. This would have been, I don't know whether, see, the problem is if you want to be really rules based on this, and I think sometimes you have to be, because if you get too discretionary, which means you can change here, there, and everywhere, you end up not really following any kind of pattern. Now the problem is the order block here that was created on this candle, yes, we came back and that would have been a lovely entry to get in, but it's not in the reversal zone, so this one would have been missed. And that would have been a really nice that would have been a nice one to have. But that did get caught. On the 5-minute, we didn't catch this, but we did on the 15-minute, which is always why it's good to have to trade these. When I say intraday, I'd probably say somewhere between 5 and 15. I wouldn't go anything above that, because then it's more not so much swing trading, but maybe 1 or 2 days you might have to keep hold of these. So 5 and 15-minute. But as I say, we didn't catch this on the 5 because you can see we're not in that reversal zone. But over on the 15-minute, we did catch that in the reversal zone. So okay, so let's look at the next potential idea. So again, right now we'd ignore this one. This one isn't in play. I would say like this. I would have a short entry at 23,123, right? So nice in the middle there. I'd have a nice tight stop loss at 23,118 or 190. Maybe just to clear this little area here, I'd maybe go 23,243. So you've got a nice tight stop loss. You've got a nice entry. It'd be a short entry, and I'd be targeting the smart trail here. To the downside, again, if you're looking for a long, 22,326. Again, we're on the 15-minute. Be targeting a long. My stop loss would be around the 22,084. With a move to here. So in terms of risk to reward ratio either side, let's have a little look at what they look like. So from a long position, your long entry is here, stop loss is there. You're looking for a take profit here. That's a 1.185 risk to reward ratio, better than 1-to-1, of course. And then to the downside, what would that look like? Let's do a short. So again, you're looking to get in on the center point, about there. Risk to reward about there, 3-to-1 ratio. That's a lovely one from a short perspective. Now, as I say, these may or may not play out, but I think just in terms of a day trading strategy, I mean, if you're a veteran of this channel, or if you're in our server, you'll know we have a more macro outlook and a longer term time frame. But I think from a day trading perspective, I really like these ideas because you can be quite systematic with the approach. You can to some extent fit and forget. The only thing I would say is you've got to be mindful of on the fit and forget idea is that these can repaint the moment these break. We'll be looking for the next order block to be created in that zone. So just be mindful of that. This one now, I'm just going to move over. Wonder if yeah, quite possibly Moonrise. By the way, Moonrise first approached me. Moonrise is currently in the live chat, but she is a moderator in our server, fantastic trader, but she brought this to my attention quite recently, and actually I didn't really think too much about it until I combined both the Lux Algo Premium and the Lux Algo price concepts. And when you look at maybe it was another YouTuber who actually, I don't want to claim that it was anything, whoever created the idea. I think all I like is to kind of just clear out some of the false entries just by only really looking at the swing. Let me just double check one thing actually, just really quickly. I want to take the internal off. Should get rid of the middle one. Yeah, perfect. That's why that was on there. So I think what I do is the only slight change on my narrative is just by looking at removing the internal order blocks, only focusing on swing, high likelihood of getting hit. Now you can see here, in just from 23rd to the 25th, so we've only really had 2 entries but 2 winners. Yeah, so when I say day trade, it's fair to say, at least on the 15-minute, I can't comment on the 5-minute, I haven't done enough back testing on that, but at least on the 15-minute, you don't need to trade every day, by the way. You just want to be able to have trades that are successful. If you get 5 or 6 trades in a week, you tick a big box, and specifically if 80 or 90% of them are all winners, you know, that's bang on. And from a swing perspective, you're looking for one at the top and one at the bottom, and then that's it. You know, it's you don't really care on the bias. Is it long or short? Well, it's wherever it's closest to. So, and as long as it's within that reversal zone, you're cooking on gas, aren't you? So that's what I would say on that. But it's a really, really solid strategy. And again, one of the things we can kind of look at. So I'm saying right now, you know, right now is if we are closer to we're closer to a long entry than a short entry. So what I want to try and analyze is, does Bookmap give us any better confluence than just suggesting that the reversal zone where we want to is what, you know, do we want to just go slightly below the reversal zone, or have we got any better confluence with Bookmap in order to determine the stop loss for our, because a lot of the times, by the way, you know, you come into the reversal zone and let's look. I mean, when have we broken the reversal zone? Now obviously these order blocks that you're seeing here, they repaint. So the only way to really determine is if we say, okay, let's go back to here as an example. Right, so where's the order blocks on the 15-minute? So we only have one down here, right? So just as an example, as a little bit of a back testing exercise, I mean, look at that. That would have been a fabulous entry. So the order block was created here. Yeah, and then we entered on this one, which was right in that middle. So again, that would have just filled us perfectly. The only difficulty is, well, or you can clearly see it's only going to be a small win, right? So we entered here, and then we broke the zone on this candle here. So that would have been a really small move, but if you look at the entirety of that actual swing move to the upside, it's a shame because you would have missed that with this systematic approach. But it would have been difficult to know, specifically if we're just trading this day trade style here, you know, what exactly are you looking at? So okay, we've flipped reversed there, we've hit, gone above our zone, and then we've taken profit, because this could have just quite easily have gone, you know, hit your zone and then gone down to here, you know, and then moved up or whatever. You just, hindsight's a wonderful thing. So that would have been an entry, and the next time, you know, I'm trying to think, would there have been anything else we could have used to suggest, well, rather than using the trend tracer, what about the 200 EMA as an example? Let's look at that. Or could we do the anchored VWAP? Let me look at that. Where's the anchored VWAP? Kind of just doing this on the fly here, guys. Apologies. So I want to take, let's say, the most recent high here. No, wouldn't have picked it up, would it? Because even if you use the top side of the anchored VWAP, it would have been a bit better than the trend, the average, sorry, the smart trail, but it wouldn't have been, it still wouldn't have caught it. Would we have had anything, let's see, with the EMA ribbons? Let's just check that really quick. So, not really. That's the 200 EMA there, so we were above the 200. So we'd have entered on this candle, and we might have got out on the 200 there. It's not a massive move, is it? But it is what it is. Look, I guess you're never gonna catch the huge move. We would have caught that move. How is that the case? Can you explain why we would have caught that move in your opinion? Because I think if you're taking in terms of where so you're entering here, right? So that we've come down, we've hit the middle point, we've entered the trade as a long, price has gone up, our take profit has come as we've taken profit here, or are we saying we wouldn't have taken profit until we come back? Oh, actually, thinking logically about it, because We've broken through, right? We need to come back. Yeah, no, I am absolutely wrong. Forgive me. Forgive me. So it's when we come back down to test the blue because we've flipped. It's red here. Yeah, we flipped. Now the moment we take profit is when we come back down. Oh, what a move that would have been. That's where we'd have taken profit. There. That's correct, isn't it? That wouldn't have been our TP because this is red only when we come down and test the blue, which is the support, not the resistance. So I'm really liking this. I am really liking this strategy, and the more and more I play with it, the more and more I think it looks quite powerful. So what I wanted to do anyway, let's just get back to what I was just going to show. And I also want to just do a quick overview of Bookmap for my good friend Sol. So one of the things I was looking at is saying, okay, well, if our entry is 22,300 and it would require you to have Lux, Algo, Mayhem. However, you know, whether it's me, Moonrise, we can be posting these kind of day trading ideas because we both have it anyway in our server. So, shout out to anyone who's not in our server. Get yourself over. Link is in the description. Anyway, shameless little plug there. So what I want to know is, can we improve on our stop loss? So I'm saying now, if our entry is 22,323 for a long, 22,323, let's get Bookmap back on the screen and let's have a look at what we can see. So 22,323 is around here, right? Just here. That would be our entry, yeah, our middle point. This is the absorption here, which is at 22,300 to the letter. So remember 22,300. Let's head back to TradingView. 23,300. Just let me put it up on my screen. Let me get a line. 22,300, right? It's a really tight stop loss, and actually, I mean, that would be, if you was to apply that, let's just say, I mean, look, maybe even if you just go to the bottom of the order block, but if you was to say, let's say it might not get past let's say it gets absorbed, okay, because there's a lot of liquidity there. I know you can't see it right now, but I'll tell you there is just shy of 500 BTC orders to be added in there. But on the basis of that, let me just get back to Bookmap. Sorry, not Bookmap. What am I doing? Back to TradingView. When you look at the data at that value, my feeling is you can actually be really tight. You could theoretically set your stop loss just below, and again have your risk to reward ratio at like 20 to 1, and that would be insane. And we were absolutely so close to breaking that. You can see we were about 10 pips off, if that, with a really nice stop loss. Personally though, I'd probably, I'd be happy with at least the middle. I would be more comfortable with even going just outside of the trend reversal. One thing to note on this as well, by the way, is you may or may not want to use a higher leverage, simply because these aren't big moves. These are really short moves, and with tighter stop loss, like for example on this one, yeah, if you're using Bookmap, let's say we have a really tight stop loss and we want to say, well, we're just going to go just underneath 22,300, or maybe just here. The risk to reward ratio is still like insane. It's like 15 to 1. So whatever leverage you apply, if you're going to catch this one, your loss is not huge, is it really? It's 28 basis points. Even if you were if you had $1,000 in your account, right, and you you win an 100x, and I'm not advising this is the case, by the way, but just making kind of some rudimentary numbers. If you had $1,000 in your account and it's about $10 per pip at 100x, let's just say, your loss is $280. That sounds a lot, but it's relative to $1,000, which is in your account. If you had $100 in your account, this would be like losing $28 to win $1,000. Point being, it's not quite $1,000. Yeah, it would be $1,000. Actually, it wouldn't. It would be $1,500 from 100. Is that no? $150, right? On top of your $100, because you start with the $100. Your risk is that you'd lose $28, but you would get back 150 on top of your $100 that you started with. So risk to reward's always whatever you're willing to put on the line. But I think with smaller leverage can be your friend with these kind of really tight stop losses, as in you can quite happily leverage up just because you've got a nice tight stop loss. So, but this is a good strategy. Let's head over back to Bookmap again, because I just wanted to talk a little bit about Bookmap. Now, what we're looking at when you're looking at Bookmap, I like to kind of zoom out a little bit. I like to have the CVD, because the CVD at a glance shows you the pressure. So we're getting more selling pressure into the market than buy pressure. But I also like to kind of see where, what we're looking at right now. If you're just watching this and you see this big crazy long snake and you're wondering what's going on, essentially what you're looking at is a live order book. Now this is Binance's order book. So what that means is everyone who's trading, you have limit orders and you have market orders. Realistically, you only have market orders, but that's a discussion for another day, because limit orders effectively are market orders when they are triggered. But anyway, in terms of market orders, a market order is when you're happy to pay the spread. What do I mean by the spread? Well, the green and red is the bid and the ask. That's the bid being what I'm happy to pay, and the ask being what I will pay for it. So sorry, the bid being what I will sell it for, and the ask being what I'm willing to pay. So the difference between them is essentially the spread. Now, dependent upon how liquid a market is, can essentially be how far the spread is between them. So the idea being that if you try and buy Bitcoin at market value, if the spread's really wide, you will pay whatever the current ask is. Yeah, so you'll pay that whatever that is. So it's not as bad on Bitcoin, but the problem is, if you see all of these different price points here, each one of these tick values, you got like, we're on a tick value of 10, right? Which means every single line is a tick value of 10. So 22,540, 22,550. So there's 10 pips between each one of them. Now, for example, at 22,540, we have around 158 Bitcoin currently here. That's called liquidity, right? I know this sounds simple, but this is liquidity. That means there are sell orders, people who want to sell, as in they think the price will go down at 22,540. And you can see it's going up and it's going down, moving around. That's because orders are going in, coming back out, orders are going in, and that's very bot centric, algorithms and stuff like that. Because normally, me, you, and everyone else, we put an order in and we just leave it to get filled. When you see kind of up, down, left, right, center, in and out, normally it's just bots kind of, in and out with different orders trying to get. I don't know why they do it. Maybe someone more technical can explain that. But ultimately, you can just tell. Most people will have an entry, leave that entry in there, and that will be it. Now, what you're seeing here is, if we hit pause, if we took a snapshot and hit pause right now, in fact, let me just, no, I can't do that. If we hit pause right now, we would see this is where the current price is, right? And you can see the liquidity. So we've just dropped down. So we're now at 22,480, but you can see there's a tiny bit of liquidity to the buy side. It's called buy side liquidity. Now we've got sell side liquidity, now buy side liquidity. And now what it's saying is, as aggressors come into the market, so when markets, so when if I do a market order, what I'm essentially doing is I'm saying, right, what's the available liquidity at the current price? Doesn't matter what the price is. I'm just going to hit buy, market order, and it will say if there's buy side liquidity, I will then absorb whatever my market order is. So if you've got 50 people all doing a lot of big orders right at the same price point, and we run out of liquidity at this level, it will move up to the next level, or down a level, or down 3 levels. So sometimes what you'll see is the price will just, it's called slippage. The price will just go, it'll rattle through like 5, 6, 7 price points. Again, remembering that each one of these is 10 ticks. It will jump up like 4 or 5 times 10 ticks. That could be 50 ticks, 100 ticks, 1,000 ticks, depending on how liquid the market is. But once an amount of money comes in from aggressive orders all at the same time, and remember that could be key levels, a specific key level gets hit, huge trend reversal, loads of big market orders, aggression comes into the market, price just slips down about 10, 20, 30, 40 points. That's simply because there's no liquidity, or there's more buying pressure or selling pressure than there is of liquidity at a specific level. So again, the price just shoots down, and that's the whole entity of the thing that moves the markets. The price is just, where's liquidity? Okay, it's like if I don't have liquidity at any of these price levels, so each one of these ticks, you can see we've got liquidity all the way up here. No problem at all. But if let's say this was like Atom, or I'm trying to think of a crap coin, but and I'm not saying Atom's a crap coin, by the way, but if we had a market that was very illiquid, i.e. there was no liquidity at specific levels, well, the price impact would mean that if we had like 22,530, 22,540, 22,550, 22,560, and we had no liquidity at 22,560, it would jump. If market orders came in, it would go from 22,550 straight to 22,570. So it would skip out where there's no liquidity. That's called price impact. So if a big order comes in, a huge order to move the price, if there's no liquidity at a specific level, that means that their market order might want to get filled at 22,510, but if there's not enough liquidity at 22,510, it's then going to buy at the next price higher. The problem is the next price higher might be that you've got no liquidity at these levels. So your next, let's say I want to buy 1,000 bitcoins now. If I do 1,000 bitcoin order, so right now we've got like 5 or 50 Bitcoin here, 23 Bitcoin here, 125 Bitcoin here, 1,000 Bitcoin. If I do a market order at 1,000 Bitcoin here now, well, there's not 1,000 Bitcoin right across this spread, which is to say it's going to average my market order right the way through all of these different price points until my value gets eaten up. Does that make sense? It's like you need liquidity. And if there's no liquidity, you can't exchange. So when we talk about market makers providing liquidity, their job is essentially to do that. Because if I'm a big player and I'm a whale and I have got a lot of money and I want to get out of a trade or even enter a trade, I'm not going to get in at a trade where there's a lot of low liquidity, because I'm going to get smacked by price impact. I'm going to get smacked by low liquidity. My market order might not get filled, or get filled at the price point that I want it to get filled at. It's all to do with where the liquidity is. So you'll often hear this term, kind of look, what's the word I'm after? Like, you'll see if you look at volume profiles as a classic example. Maybe I can kind of demonstrate this a little bit on my other chart. I think it's just a quick thing to maybe talk about. But if you look, let's just go on the daily time frame, right? Let's just turn off the algos for a quick second. But it should come to no like illusion why you have specific areas on the chart that get sticky and areas that don't. I mean, right now I'm taking the top. Let's see where the top was, right, of the whole bull market. It was this 69, 68k, right? If I take this right the way back, so that the point on the chart is this whole move down, right? Right, this is where we are now. If I take that and I put my daily profile and I put my profiles on, so let's say, actually, I'll tell you what I can do. You can see, I'm just going to be really like, I'm just going to be really, really quick with this, and just to demonstrate what I mean. If I take, let's say I have a spike here, I have a spike there, somewhere around here, got a spike there, here, gets a bit more noisy around here. There, we've got here, which is the point of control, and then we've got here, right? So if I take my volume profiles off, right, the first thing you'll notice is it's like, well, why do we get volume around these lines? Well, the reason is because that's where there's a lot of liquidity. What does that mean? So what? A lot of liquidity. Well, it means bigger players can transact. Whales can move money in. Whales can move money out. It's why it's, again, should come to no surprise when we see this big move to the upside or to the downside is always in between where these lines are. It's like we get choppy around the lines, but we don't get choppy down the lines. It's because there's no, you know, price impact and price movement moves fast where there's no volume, or there's less liquidity, let's just say, and there's no liquidity around these areas. You're just seeing on the volume profile, and because there's no volume to transact, the price just really goes down. So even just as an idea for trading, swing trading, just targeting these key areas here, the lines on a chart, and we've covered this in a lot of the earlier sessions that we've done, but it's a great tool just to kind of trade level to level. You hear me say that a lot, trading level to level. Well, it's just these levels, and again, it just looking at the big huge move to the upside. Again, where did we stop on this candle? Right at the volume, probably stayed around here for a bit. This is a daily candle, and then we move back up to the stickiness here. So anyway, back to the point I'm trying to call on Bookmap. So let me get back on that. I think the interesting thing is that just understanding what liquidity is, why it's important, why market makers like to move price to it between zones of liquidity, because they can transact a lot and they're not going to get caught out on price impact. They're not going to get caught out on slippage. They're not going to get caught out on, the spreads. It's nice and easy for them. The opposite side of this, by the way, is, look, market makers are never really going to put a shit ton of limit orders in, because they want to disguise their orders, so you'll tend to find that they will be market orders. It's like when you come against a really high confluence area where there's a lot of ideas, a lot of, could be a key high term time frame, could be a monthly level as an example, could be a pivot point, could be, a 618 golden pocket area, whatever. Could be a reason why that would be a good place to reverse. Well, you will often see a lot of limit orders in them specific areas. However, you'll also get hammered with the market orders at the same time, because whenever you hear me calling out, oh, there's liquidity at that area, it's simply because usually that point at which the last peak has been in a chart is where you're going to find a lot of liquidity, because big players will put market orders straight in, bang, 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 hit the market orders quite quickly, because they know it'll be a place where there's a bit of indecision, i.e., are we going to break through this key level, or is it going to be a liquidity grab? Either way, there's going to be a lot of liquidity happening at that area. So it's in the general sense, it's why you call it a liquidity zone. Is it going to be liquidity for reversal, or liquidity grab, or is it are they going to use that area as a breakout rather than a fake out? So just to be mindful. So as I say, what you're looking at down the right hand side is simply the order book. So how many orders are placed? So this is all sell side liquidity. This is all buy side liquidity, all on the order book, all waiting to be exchanged. However, these delta bubbles here, these are the market orders, also called aggressors. These are just, again, happy to pay the whatever the current bid and ask is, whether it's buy or sell. Now, the way I have my chart set up is I like to have the delta on the bubbles, which is to say the difference between buyers and sellers is you can see on, for example, let me just it's not going to do that. I'll just take this down a little bit. You can see, you like here, there was more buyers than sellers in this current market, in these market orders here. Again here, more sellers than buyers, so on and so forth. They were quite evenly matched here. So this gives you an idea of kind of where the buyers and sellers are. Again, the CVD, cumulative volume delta, gives an indication of there is 6,000 weighted towards the sellers in terms of Bitcoin than there are in terms of buyers at this current price point, at this current level. So the CVD, the way I like to think about it in its most simplistic terms is sell pressure or buy pressure. Right now, there's a lot more sell pressure than buy pressure. However, what I really, really like about Bookmap is, if you take, I don't know how far back we can go on the chart, but you can see when you're looking at cumulative volume delta and you're looking at price action, there's two things that you want to see. When volume delta starts to decrease, as in goes down, as in there's more sell pressure, you want to see the price go down. If you don't see the price go down, but you're seeing the CVD go down, well, it tells you one important trait, that there's a bigger player absorbing that sell side liquidity. And what are they? Well, they are essentially limit orders. That's where they are. Price doesn't want to go any further. CVD's going down. You can see open interest, which is new money or money leaving, the order book. So if open interest starts to decrease, if open interest starts to increase, as in more money's coming into the market, but the sell side liquidity CVD is going down, as if to say there's selling pressure, but the price isn't going down, then again it's buy pressure, and then usually you'll see a nice reversal from that. So again, looking at things like the movement, the motion of are we moving downwards in terms of price, and are we moving down in terms of CVD? Well, it's a good indication that the sellers are in control, the bears are in control. So just to be mindful, I don't like looking at the dots like this. I like to kind of have the smart bars on and kind of have it more like a snake. So when price moves really quickly, I don't know why. I just think I like to see it. I like to see it like this. So this again is what we call the session volume profile. So think of that volume profile that I've just added up on there. It's to say, what, this whole area here is where the most volume is being traded. And again, it's why we're kind of getting a little bit sticky at this moment in time. But Bookmap is great. It's just, when you compare Bookmap and we have a nice solution like we've just looked at with the algos, Lux algos, it's really, really key to be able to say, well, actually, because again, Lux algo is not perfect, right? Because the Lux algo will, I'm not sure how the algorithm actually works, but it will only look at things like where did we reverse and create an order block? Well, I know right now I can see I don't know if you guys can see this as clear, but I can see an order block without even needing to draw an order block, and it's this line here. Yeah, you can see this is the order flow. This is to say at this key level here, this 22,200 and, well, actually 22,300 to be exact, that volume hasn't moved. It's bright orange, nearly red, all the way through. We can see we started it here, right on this corner, came over, tested it again, order block rejected. So, the way the Lux algo will pick that up is it will look and see where the buy pressures came in against that order block area, and it will paint an order block. But that's great because not everyone has Bookmap, and well, not everyone has Lux algo actually. But in terms of being able to map that out, it's quite easy to map out order blocks. I don't think it's too difficult. I'm just going to transition back over to this really quick. Let me just take these off the page. Okay. We were on the 15-minute, and we had a couple of nice ideas and concepts in play, which I'll post shortly actually in the server because I think they're still both valid and live. We want to bring in Lux algo and that. I just really like this. I really like the concept of, number one, it's an order block. Okay, so we know the strength, and this is a swing, so it's a stronger, it's more sensitive in terms of buy. We had like 150k there, nearly 200k there. Remember, we're only on the 15-minute. These are not internal order blocks, these are swing order blocks. So I've only got 2 selected, which means I only want to see 2 order blocks at any one time, hopefully one above, hopefully one below. And then my entry is, as soon as we hit the middle of an order block, I'm going long. As soon as we hit the middle of an order block here, which is that 23,121, I'm going short. And where we were looking before is why we were looking at Bookmap is, I would say, if you don't have Bookmap, well, you want to just give yourself a little bit of breathing space and go, clear your zone. Now, what we can say is what Bookmap provides is a much tighter stop loss, to the point of, well, you can clearly see where the order block on Bookmap is. So if I say, the bottom of the order block here is 22,278. Well, actually, Bookmap is slightly higher. Let me just show you what I mean. It's literally 22,300. Now, that's not, to be completely honest, that's not a huge amount of liquidity. We've seen this up in the thousands, hundreds, 800, 900, whatever. This is just relative to what's currently being traded, so it's bigger than what you're seeing, in these traded zones. So it's still a good order block. Still confidence in it. The question is, do you want to be really tight with your risk to reward ratio and just maybe go, so if that's 22,300, well, there's 410 Bitcoin ready to be bought or traded at that zone. Now the idea is that, do we want to just go slightly below that? So you'd say 22,290, which is 10 pips below. Yeah, 10 ticks to the price action here. Or do you want to give yourself a bit more breathing space? So if we go back to trading view, well, what would that look like if we go to trading view, and we'll just double check this. If we were to say, well, actually, let's give ourselves a bit of room. We still like the risk to reward ratio. We're still at 1.79, although we might want to go a little bit tighter. Maybe we want to go to 2 to 1 ratio. Now you can say, well, okay, where's our price at? Our price is at 22,101, right? What does that look like on Bookmap? 22,101. Well, 22,110. It's here, right? It's this line here. So there's currently, you can see traded is about, I need to maybe bring this down a little bit. Let me just bring that down. 22,101. So there's 278 Bitcoin down here. That's obviously a bit further of a move down. But I just think the thing I don't know, and it'd be interesting to kind of figure this out, is do we have do we know what creates these reversal zones? Do we know how the algorithm, essentially creates them? Because that would be interesting to know, because I don't know what creates them. But I'd like to. So the only difference is, do you want to create a really tight stop loss on the basis that, we absorb the pressure, because you can see there's over 400-500 Bitcoin at that 22,300. And if you lose, well, it's not the end of the world. It's a 28 basis point loss, and you can stomach that, because the reward is a lot healthier. And remember, we're aiming for the middle point here. And a lot of the times these order blocks just come to the middle. They'll tag the middle point, and then they'll reverse and then head to the next height. So all in all, guys, I don't know what you think, but I think it's a solid strategy. I think the risk to reward is fantastic. I think worst case scenario is, we lose like a small percentage, but the win side is, it's a lot more. So I'm gonna have to leave this one here, because I've got to go and pick up my children at the moment. I will be in Discord in a short while. Hopefully you guys have enjoyed it. Vlad, Mayhem, Moonrise, always a pleasure. Thanks very much for conversating. And I will catch you guys in a short while. So speak to you soon. Bye for now.